Welcome to another TA session with SI. In this session, we're actually going to look at patterns and indicators, two most widely used indicators in the market, RSI and MACD. How do they play with the pattern? When can you actually identify a breakout, whether it's a continuation pattern or a reversal pattern? So you are looking at these to understand how you can take an edge over the market. So let's look at this one first. Now here, the price is actually trending to the downside. So as the price trends to the downside, say for example, you are coming here to the downside. One, at the top, you see a pattern like this, one, and you break to the downside. So that's when it is a downtrend. And then it actually goes in to ascending wedge, broadening ascending wedge like this. So at the time, you need to actually focus on your indicators, right? Let's actually zoom in and see like what that particular stuff shows you. Now focusing on this particular area once, right? Here, your price bottoms. And at the same time, you can actually see your indicator is somewhere here. But the MACD is not crossing to the upside. MACD crosses to the upside, suggesting that the momentum is changing. So when the MACD is crossing, it means the bottom is already in. So usually that's when the MACD both lines are wider. That means you're already peaking to the upside or to the downside. In this case, to the downside. Now, as you are getting bounced from this pattern and moving higher, you're looking at your indicator. Is it actually going sideways? Or is it actually trending lower? In this particular scenario, what you're seeing is it actually came lower. So usually we say 80 at the top as overbought territory, and 30 at the bottom for oversold territory. So if you're below that one, we consider that the market has been pushed too low, that's oversold, and it may bounce back. So you're observing the pattern. So you see like a pattern coming in, trading inside a channel and then breaking to the upside. As it breaks to the upside here, it starts to trend with a new high and a new low and then continue to the upside. That is showing that RSI is turning bullish. Fine, that's bullish. Now, you're looking at the MACD at the same time. Is it actually crossing back up? Here, the red line is representing the shorter moving average, which is 12-day moving at 12. And then here, I'm using 21. So once you're getting this, it's not MACD is just the moving average, convergence and divergence. So as you actually observe this is changing, you now get bullish attitude from both the indicators, and then you're observing the price. And the price itself is in a pattern which suggests you that it's actually making higher lows each time it's moving up, and it's giving you higher highs, which suggests bulls are in control. Now coming up to the next pattern here. Now usually this is a negative pattern, meaning in this scenario, when you are coming to the downside, usually this breaks to the downside. Fine, that used to be a continuation pattern, but right now, in a lot of different crypto assets, you're getting the same pattern breaking to the upside. That goes back to our last video where we discussed about bearish patterns breaking bullish. So here, why do we actually come up with something like that before the market actually does that? The reasoning for that is, yes, the trend is to the downside. Yes, this is a continuation pattern, but when that continuation pattern is happening, you look at the indicators. The indicator actually put in this one, which is oversold territory. The indicator kind of gives you that idea. The market has been pushed too low. It needs to come back up. And while the market is making this corrective pattern here, indicating a further downside, you actually get a bullish segment here, a different pattern which shows you bulls are active in the RSI. Then at the same time, you also get the MACD showing, okay, we are going to go for a short-term relief rally. So that is bullish. So when the indicators are suggesting you, okay, that's bullish, now we are waiting for the price to see whether this particular bearish pattern is going to break to the upside. But right now, you have this breaking to the upside. Now, there can be a retest and bounce. So if you are a bull entering into this trade, you are looking to buy the breakout or the retest. Now, why does that actually matter? Because your RSI is now going back. You actually had an inverse head and shoulder, which actually broke higher, came back lower and retested. While retesting, it happens to be a bullish pattern, right? you get both of these indicators going bullish. Now, these are like the general scenario, but there are some which actually goes a little bit wilder. That's what we are going to look at next. So this one is right now on a macro scale, you have some cryptos doing this, a Gartley pattern. And that one, yes, the indicator gives you the bottom. Yes, the indicator suggests you the momentum is reversing. But the price action kind of looks like, okay, it's a double top possibility. Are we actually going down? How can you even say that there is a bullish sentiment still left there? Reasoning. See, when you look at this bottom here, you're getting the RSI at the oversold territory. Fine. Then, when you're at the top here, you are not at the top of the RSI. You're not at the oversold territory. Here at the top, you weigh at the oversold territories. You didn't have much room to the upside. You pushed the market lower. But here, you do have market to go higher, the available upside. Then you come back to the MACD. It's actually slowly trending to the upside. Given that, it's crossing to the upside once here, and you made a new low here. Now, these are higher lows. Fine. Then again, you come to the MACD for the next one, and it actually gives you another higher low on the MACD line. So your indicators are turning bullish, where your previous resistance in the RSI has been broken. And then the MACD is giving you two crosses with divergence, right? When the price is moving like this, that always gives you an indicator. Short term, you look at this pattern, you're like, okay, that's a rising wedge, you're going to go to the downside. But as you zoom out and look at this, if it breaks to the upside, this is the reason why it is breaking to the upside. Why? Now, when it actually breaks to the upside, it may come back lower and then go up. Why? This then turns into a cup and handle pattern. So looking at different time frames of charts is really important. If you learned something from this segment and you want to watch and learn another short segment, you can go to this particular video. Or else, if you are looking for fundamentals, current affairs, and the market sentiment analysis, you can look at this particular video. Guys, if you received value, please do hit that like and subscribe button. That supports the channel a lot. So I'll meet you guys on the next video. Bye-bye.